right, let me get my image to full screen, and we're good. All right, I've got a student book in front of me today instead of my teacher's book, just so that we're looking at the same thing. If you would, please go ahead, and I know it's weird for me to have you go to the textbook because I don't do that very often, but turn to page 54 in your book, just to get us all about to the right location. In Chapter 3, we're going to get finally into an actual accounting form. In Chapters 1 and 2, we were learning the basics of accounting, and we were learning the process of debiting and crediting using T accounts. But now we're going to actually use the form that is used in an accounting work. Now, I do my accounting in our business on a computerized program. It's called QuickBooks. Pretty common program that a lot of businesses use. And I still have a general journal in that QuickBooks program. And I use it, we use it once every other week, definitely. And then there are other times when it just comes into play. But the general journal is going to be what's the most basic journal. So when we talk about a journal, it's just a form for recording transactions in chronological order. And then that process of recording transactions in a journal is called journalizing. So those two terms are for you on page 56. That's, again, not really what I'm aiming for here with having your book open. What I want to do with the book is look at page 57 and what the general journal looks like. Now, all we've done so far when we recorded transactions was either recorded them in the accounting equation or we recorded them using T accounts. This is an actual type of form that you would use for recording transactions. It has a date column, has an account title column, a document number column, we're going to talk about that in just a few moments, a post reference column, we won't get to that until the next chapter, and then your column for debiting and crediting. We have to keep a page number on these journals, just keep track of what page we're on, because you're going to fill up more than a page in a month. And so this is now the format in which we will record transactions. Every time we record a transaction in the journal, it's called an entry. I guess what I really need to emphasize now is this column. I think you understand that you got to have a date for the transaction. The account title means what account gets debited, what account gets credited. But this document number is something we've not dealt with before. Anytime you record a transaction in accounting, you have to verify that it occurred, that the transaction actually occurred, that somebody isn't trying to pull a snow job on the company and take out some money for purposes other than what is actually necessary for the business. So anytime a transaction is recorded, there must be a source document verifying the accuracy of that entry. And those are mentioned down here. So when we talk about source documents, we mean basically business forms that verify the transaction. So let's look at some business forms that might be used. On page 58, checks. If you write a check, that check would be the source document. The check and its number would be the source document. That's one source document. If you make a sale, you're going to fill out a sales invoice that you will provide to the buyer. That sales invoice would be a source document. If you receive cash, you'll either have a cash register tape that you will use, or you're going to have to fill out a little form like this and provide them with a receipt. You'll keep one half of the receipt, you'll hand the other half of the receipt to the buyer or to the person giving you money. Whatever reason that cash comes in, if you don't have a cash register, which is rare, then you would need to fill out a receipt to say, okay, here's your receipt. Let's say, for example, though, that the owner makes an investment in the business. That's not going to run through the cash register. You still need to have something to verify that. So you might have a receipt. Memorandums are documents that are used for anything that doesn't really fit the bill somewhere else. It's not a check, it's not a sales invoice, it's not a receipt. You can fill out a memorandum. Regardless of what, and then of course your cash register tape would work also if you have a cash register. Regardless of what the transaction is, though, you must record the transaction based on that document. And then that document number has to be recorded. So if it's a check, we'll put a C and then the check number. If it's a receipt, we'll put an R and then the check number. If it's a sales invoice, we'll put an S and then the check number. But you cannot record an entry in the general journal unless you have recorded the document number. Now, I think the easiest way to learn the general journal is just to do the general journal. So we're going to do Work Together 3-1. Now, this is a continuation problem. They tell you the account names to use here on page 62. So we'll be coming back to these account names frequently. But it starts here on 62, and then it continues on 67, and again on 73, and then finishes up on 77. So it's just same general journal will be used, but multiple pages in the book. All right, so we're going to start then on page 62 in your book. You'll need in your working papers, page 37, and you see here the general journal form that finally gets you to the point where you are using an actual accounting document as opposed to just a learning document like the T-accounts were. Okay? Let's start by reading the instructions. A journal is given in the working papers. Your instructor will guide you through the following examples. Norm Derner owns Derner Copy Center, which uses the following accounts, and they are listed for you: cash, accounts receivable, L row, supplies, prepaid insurance, and so forth. Then they give you the first two transactions and say, journalize each transaction completed during April of the current year. Use page 1 of the general journal. So you need to write a 1 there on the page number, by the page number on the journal. Source documents are abbreviated as follows. Checks are a C, receipts are an R, and then save your work to complete Work Together 3-2. It's the same thing we've done in the past. We have to put in a date. We have to indicate which account will get debited and which account will get credited, and we put that amount in the appropriate column. Now here's the key thing though. In the past, I let you just go with whatever account was easiest for you to begin with. Here, the debited account is always recorded first. In the general journal, we always put the debited account first. So it's okay for us to think about which two accounts, but when we get ready to record it, the debited account has to go on the first line. All right, I'm going to walk you through a couple of them before I start having you tell me what you think gets debited and credited. All right, April 1st, so we're going to write the date, and we can abbreviate April, APR. The day of the month goes in the smaller column. Can you see up there? Do I need to zoom in a little bit? Whoops, sorry. And then on the first page, you need to put the year, real small, right above April. Now that only needs to occur, you only need to put the month on the first line of the page. The month and year only need to go on the first line of the page. Now, you do need to put the day of the month on every entry, but the month and the year only need to go on the first line of the page. All right, received cash from the owner as an investment. So I have to ask myself, what are the two accounts? All right, in the past we would have said cash and Norm Derner Capital. But I have to ask myself, which of those two gets debited? Which of those two is going to get debited here? Cash. So we'll write cash in this first line, and it needs to come all the way over against this left margin. Then we'll come over here and put our document number in. It's R1, meaning receipt number 1. We do not put anything in the post reference column at this point in time. You haven't learned how to do that yet. We'll deal with that in the next chapter. And then the amount of the debit. Now here's what throws students. I mean, I just do it because I've done it for so long. But a lot of students get thrown by these columns. Basically, this is your ones digit, tens, hundreds, and anything in the thousands. If it's 10,000, 175,000, you got to cram all that in there. So some students find that initially it's easier for them to work backwards, 0, 0, 5, 1. And then for the change, I don't put double zeros. I find that it can make it confusing. If it's double zeros, I put a dash in the cents column. So this is your cents column, ones, tens, hundreds, thousands. Okay? And for me, if it's a double zero in the cents column, I just put a dash. Yes? I didn't intend to do that. It's just how I happen to do it. No intention to that. No reason for it. Okay, then we drop to the next line and we indent in just a little bit. Okay, for the credit account, we indent N just a little bit. And we indicated that that would be Norm Derner Capital. We do not have to duplicate the source document here. In fact, do not duplicate the source document. This was a credit to his account, so I need to come over to the credit column and put in the amount. So it's the same process. You identify the two accounts, you debit and credit them, but this time we're writing them in on lines, and we do the debit first every time. Second transaction. Now, here I do not have to put April in 2013 again. I only need to put the date. The day. Paid cash for supplies. And once again, I have to ask myself, what are the two accounts? Paid cash for supplies. Okay, cash and supplies. Which one's getting debited here? Supplies. So we're going to put that on the first line. Now we come over here to our document number column, and at the end of the line there it tells you C1. That means check number 1. So at the end of every line, whoops, let me get this up here, they'll tell you your document number. Okay, C1, and the amount was $375. And then the credit part of that was to what? Paid cash was cash. Okay? So we'll write cash in, and in the credit column, $375. Not too bad, is it? Let's go to page 67. Continuing with more transactions. And they've been kind to you there. They give you the accounts again. On the 5th, bought supplies on account from Palm Supply, $500, M1. M1 means it was a memorandum 1. Bought supplies on account from Palm Supply. The date is the 5th. I'll go ahead and write that in. Now, what are the two accounts here? Bought supplies on account. Supplies. And accounts payable, be specific, Palm Supply. Which one of those is getting debited? Supplies. Okay? So on the first line, we record supplies. And it tells us M1 is our source document. And the amount of that, the cost of those supplies to us was $500. And then we drop to the second line, indent a little bit, and put the name of our credited account, accounts payable, Palm Supply, and duplicate the amount, this time in the credit column. On the 7th, paid cash for insurance, $300. Check 2 is our source document. I'm going to go ahead and write the date in, the 7th. What are the two accounts? Paid cash for insurance. Cash and prepaid insurance. Which of those two is getting debited? Prepaid insurance. Okay, so we're going to put it on the first line, all the way over at the margin. I have some students, or I have had students in the past, who it just seems impossible for them to follow this pattern of the debited account at the margin and the credited account indented sum. It's like their lines are all over the place. Do your best to keep debited account up against this line, credited account indented a little bit. Okay, so prepaid insurance is getting debited. Our source document is check 2, and these documents need to be in numerical order. There shouldn't be an R1 and then the next one be R7. I should see R1, 2, 3, 4, 5, 6, 7. If there's a jump, there needs to be an explanation why. That would raise red flags to any auditor in a heartbeat. Where's the rest of these receipts? Checks shouldn't be a jump between check 1 and check 8. The auditor is going to ask, where's checks 2, 3, 4, 5, 6, and 7? Okay, so these are going to appear in numerical order. And the amount of that was $300. That's the debited account. The credited account was cash, so I indent and write the account name cash, and I go to the credit column and fill in my $300. On the 9th, So I'm going to put my date in. Paid cash on account to Palm Supply, $250. Check 3 was written. What are my two accounts? Cash and accounts payable Palm Supply. Which one got debited? Accounts payable. So we're going to write that in on the first line all the way over at the margin. Accounts payable Palm Supply. Check number 3 is my source document. The amount is $250. And then my second account is the credited account cash. So I indent a little bit. I write in cash and the amount $250. And now we've done page 62, done page 67. We're on our way to page 73 now. This time they do not give you the account names. If you need to refer to account names, you'll have to flip back to page 62 or 67. April 12th, paid cash for rent, $1,000, C4. So I'm going to put my date in, the 12th. Now I have to identify the two accounts. Paid cash for rent. What are my two accounts? Cash and rent expense. Which of them is getting debited? Rent expense. So on this first line, all the way over against the margin, we'll write in rent expense. The source document here is check 4. So C4 is our document number. The amount of this entry, $1,000. Now, a minute ago, DJ asked me why I slanted this line. And I guess I have a tendency when I have a number out here to slant it a little bit. And I think it's because my fear is if I make that line vertical, there's no reason to do this. I'm just thinking, when he said that, I realized I just did it again. I think that it makes it show up a little bit better. If I make a vertical 1 right there and I get it too close to this line, it may kind of blend into it. I'm not telling you have to do that. I'm just trying to figure out, when he asked me, why do you make this line slanted? There is no reason, but I think that must be why I do. I think it shows up a little bit better in that column. You don't have to do that, just my explanation about my weirdness. All right, we paid cash for rent, so the credited account is cash and $1,000. On the 13th, received cash from sales, $2,500, T13. Now that T13 stands for your cash register tape. Any of you work on a cash register anywhere? Any of you work in a fast food restaurant or somewhere? Maybe all too young. When you work in a cash register, at the end of the day, that register will generate, they're all computerized, they will generate a tape, a transaction tape, or there's another word for it, but we won't worry about getting to that yet. It's a point of sale. Terminal creates a batch sale report and all that kind of stuff. But we'll worry about that later. But anyway, that cash register will prepare a tape that tells you the total amount of cash that went through the drawer. Okay, so when you see that T, that's what that means. It's the tape that your cash register reports as your sales for the end of the day. Just a moment. Okay, so we got a new source document there, but it shouldn't confuse you. It's just your cash register tape. All right, the date was the 13th. Now we received cash from sales. What are my two accounts? Cash and sales. Which one gets debited? Cash. So we're going to put cash on this first line, all the way against the margin. T. Now, I just said that these transactions, or these source documents, need to be in numerical order, and our first one is 13. Doesn't make sense, does it? Seems like it should be 1, right? Do you see why it's not? This is the tape that the cash register generated on the 13th of the month. Okay? And the amount that went through the cash register was $2,500. The amount of cash collected in the cash register. And that was for sales, so our credited account is sales, so we indent a bit, write sales, and put $2,500. in the credit column. Is still pretty easy. On the 14th, sold services on account to L. Rowe, $510, S1. So let's put our date in, the 14th. What are my two accounts? This is the transaction that confuses students the most. It should be helpful to you to glance back at the chart of accounts. Sold services on account to L. Rowe. Accounts receivable L. Rowe and sales. Okay, accounts receivable L. Rowe and sales. Which one of those is getting debited? Somebody said sales. Sales is always credited. It's accounts receivable L. Rowe. So in this first line, we put our debited account, accounts receivable L. Rowe. Our transaction number is S1. That stands for sales invoice number 1. Now remember, if you're receiving money for cash for the cash register, then you've got a T invoice. I'm sorry, T source document. But if you sold it to them on account, you've got to provide them with some documentation, and you keep a copy of that documentation. That's your sales invoice. And the amount of the sale was $510. And sold services, so our credit is to sales again. Anytime you see sold services, it's going to be a credit to sales. On the 19th, paid cash for the electric bill. Put the date in. What are my two accounts? You may need to glance back at your source documents. I'm sorry, not your source documents, that's your list of accounts. Cash and utilities expense. Which one gets debited? Utilities expense. So we're going to start here on the first line with utilities expense. And C5 is my source document, and the amount is $148. What's my credited account? Paid cash for electric bill? Cash. Cash will get credited. So in the credit column, I put the same amount, $148. On the 20th, let's go ahead and put that date in. Received cash on account from L. Rowe, $255. R2 is our source document. Received cash on account from L. Rowe. Now, this didn't go through the cash register. We got a check in the mail. Payment from L. Rowe on account. What are my two accounts? Cash and accounts receivable L. Rowe. Which one's getting debited? Cash. Okay? So we'll put cash on the first line. R2, receipt number 2. And this is $255. And on the second line, we indent our credit to accounts receivable L. Rowe. And again, in the credit column, $255. On the 21st, paid cash to the owner for personal use, $1,000. Check 6 was written to him. So put the date in, the 21st. What are my two accounts here? Norm Derner drawing and cash. Which one's getting debited? Norm Derner drawing. So on the first line here, I'll write in the owner's drawing account. Check number 6 is the source document, $1,000. And then we indent on the next line for the credit to cash, and we make sure we put that cash credit in the credit column. All right, now we're ready to move on to page 77. And there's a reason why I'm doing all of these. You're probably thinking, okay, I got the hang of this. We don't really need you walking me through any more of these. There is a reason why I'm continuing. On the 22nd, paid cash for the water bill, and it tells you to use utilities expense, $205. Check 7 is your source document. What are my two accounts? Utilities expense and cash. Which one's getting debited? Utilities expense. And some of you are already getting the hang of just telling me the debit first. So we debit utilities expense. And that's check number 7. I should have just known that because the previous one was 6. $205 is the amount. That means we credit cash, and I put that 205 in the credit column. On the 23rd, sold services on account to El Rowe, $289, S2. Let's put the date in, the 23rd. What are my two accounts? Okay, accounts receivable El Rowe. And what's the other account? Sales. Okay, so we're going to put in the first account name for our debited account. Accounts receivable, El Rowe. This is sales invoice number 2, so S2. And the amount this time is $289. It's a debit to El Rowe. And then on the second line, our credit is to sales. So we indent, write sales, and put the $289 in the credit column. 26th, received cash from sales, $1,670. T26 is our source document. What are my two accounts? Cash and sales, in that order. Cash gets debited, sales gets credited. So we write in the date, the 26th. Cash on the first line as the debited account. T26 is my source document. That's cash register tape generated on the 26th of the month. 1,670. The credit then is to sales, and we place that credit in the appropriate credit column. On the 27th, paid cash to the owner for personal use again, $650. Check 8 was written. What are my two accounts? Norm Derner Drawing and cash. So let's start with that debited account, Norm Derner Drawing. And that is check number 8. And he got $650. Our credit then is to cash, $650. You probably have figured out now that anytime you see a C as your source document, that means a check, and therefore cash is getting credited. Anytime you see a C as a source document, a check is being written, therefore cash is going down, decreasing, and it's going to be a credit to cash. On the 27th again, paid cash for supplies. I'm going to go ahead and put the date in here, the 27th. Paid cash for supplies, $42, C9. What are my two accounts? Supplies and cash, which one's being debited? Supplies. So we put supplies on the first line. Check 9, C9 is my source document. The amount is $42. Indent on the next line, put my credited account, which is cash, and put that 42 in the credit column. Now, I'm ready. I've got more transactions, but I've only got one line left. You never split a transaction. So if you do not have enough lines left on the page to completely record the transaction, you go to the next page. So turn your paper over, or turn the page. We're going to write page number 2 now at the top of this. And since it's the first line of the page, I need to duplicate my month and date, month and year, April 2013. And now I can go ahead and start my next transaction. 28th, paid cash for postage, miscellaneous expense, $53, C10. Now some companies will classify postage expense as miscellaneous expense. But most companies have a postage expense account. At Hounds and Hunting, we have a postage expense account, and it's probably our third. Salaries would be the most expensive thing we pay for. Printing of the magazine is the second most expensive thing, and postage is the third most expensive thing. And because obviously we're sending out 3,800 magazines a month, that's a lot of postage. So we have a separate account. We don't classify postage as miscellaneous expense. All right, but they ask you to do that as miscellaneous expense here. So what are my debits and credits? What's my debit and credit? What do I debit? What do I debit? Miscellaneous expense. And the date here was the 28th. We're debiting miscellaneous expense. I'm not going to spell it out. I do know how to spell it. I'm just too lazy to spell it, to write it out, and don't want to take the time. Document number is C10. and the amount was $53. And then our credit is to cash, so we indent, write cash, and put 53 in the credit column. On the 29th, received cash on account from L Rowe, $200, R3. So I'm going to put my date, the 29th. What are my two accounts here? Cash and accounts receivable L Rowe. Which one's getting debited? Cash. So we'll write cash on the first line. And this would be R3. And the amount is 200. And then my credit is to accounts receivable L Rowe. And I've got to be sure that I put that 200 in the credit column. All right, in the final one in this problem, received cash from sales, $544, T30. Put in the date, the 30th. What are my two accounts? Cash and sales. Cash is the debited account, and this is T30 as my source document. The amount, $544. And then my credit is to sales for the same amount, $544. Okay, pretty simple. It's really just an extension of what we learned in Chapter 2. Just instead of recording the transactions in T accounts, we're now recording them in a general journal. Your assignment is the 3-1, 3-2, 3-3, and 3-4 on your own. So the purple problem right below the work togethers that we just did.